Hey y'all, come on in.
I sought the Lord, and He heard my cry. He pulled me out, lifted me high.
Alright, so I said I was gonna start coming on live maybe once a week to start educating y'all on life insurance and how important life insurance is. Evidently, I'm not getting out to enough people, and so I feel like going on live is going to help me and help y'all. That way you'll be able to be educated to really what life insurance is about. So I'm about to get started because I got a 2 o'clock appointment. Happy Sunday, y'all. Happy Sunday. I don't know what date it is, but it's Sunday. Let me see. All right, so let me stop that. So it is what, the 15th. We are March the 15th. We are already half in of March, Sunday. So today, y'all, I'm just going to come on and I'm going to educate y'all a little bit on life insurance and the 3 foundation of life insurance. Hey, Patrick. I see you. So I'm going to educate y'all on the 3 foundation of life insurance today, this week. Next week, we'll talk about the living benefits. So today, first one of the foundation is term insurance. So we have term insurance, we have traditional whole life, and we also have universal life. So universal life, there's different fundamentals to that one. But let's talk about term right now. Term insurance is like, y'all, car insurance. So say if you purchase a car, you know how car insurance is like 6 months and you get that and then, nothing happens and you gotta, reinstate it or whatnot, reapply for it again or whatnot. So term insurance is basically like car insurance because the max I've seen it so far is 30 years, 20 years, you got 15 years, 10 years. I even seen some 5 years term insurance. But y'all, let me tell y'all this. Life insurance is so amazing. If you have life insurance, kudos to y'all. But does it come with living benefits? So term insurance does come with living benefits as well as death benefits. So make sure whatever coverage that you do have, it comes with living benefits as well as death benefits. But let's go back to the car insurance, the term insurance analogy. So the way I picture term insurance is like, it's like a gamble to me. This is how I learn on term, and y'all just gonna learn how I learn. So it's like a gamble. It's like you're going to the insurance company and you're telling that insurance company, hey, you're gonna pay my family X amount of money, to say $500,000. You're gonna pay my family $500,000 in coverage within 30 years because I'm gonna die within them 30 years. So within them 30 years, you're gonna protect my family. And the insurance company is like, bet, yeah, for real. Okay, I can do that. Long as you pay your premiums every month, I'm gonna make sure that your family is taken care of within those 30 years if something happened to you. And then after the 30 years, if you ain't, converted that policy over to, a whole life or got a whole new policy after the 30 years, that's over. That policy is gone. The insurance company won. They happy you're still alive because they just won that bet within them 30 years. If you putting your premiums and stuff like that into that insurance company, they won. So they happy. But you, on the other hand, you're 30 years older. You didn't convert that policy. Now you have to reapply for a whole new policy. We don't know what's been happening. Y'all know life is life, and out here. So you're 30 years older. So, you know, there can be some pre-existing conditions. Now you might not qualify for life insurance. And y'all, please do understand that you have to qualify for life insurance. There's other entities and there's other insurance that we can give you, final expense, pre-need, at need, but that's a given. But for life insurance, you have to qualify. That's why I am preaching to you guys. The moment you have kids, put them on life insurance 15 days of being born. I'm like, hello, why not? No brainer, is cheap. And y'all, don't get me started. But anyways, so this is term insurance. You took a gamble with the insurance company and you lost that gamble. Now come on now. If you won that gamble, that means you passed away within them 30 years and your family is taken care of because the insurance company paid that policy out. So, yes. So, but you're taking gamble is basically what that is. And it does not build cash value. So, it does come with living benefits. It does come with death benefits, but it does not build any cash value at all. So that's term insurance. And term insurance is not a bad thing. It's good for people who are single parents, you know, who are, you know, just one person by themselves. Term insurance is good if you don't have any kids, or even if you do have any kids, because it's affordable and you're able to get a big, huge amount. The only thing is, you're not building cash value on that. So that is term insurance. Okay. We understand that. Okay. Let's go to a traditional whole life insurance now. Now, the traditional whole life insurance is basically you're depending on the insurance company. It's like you're telling this insurance company, it's like, hey, I'm gonna pay my premium for the rest of my entire life, because when I die, because there is 100% chance we're all going to die, but when I die, that you're gonna take care of my family. So I'm gonna pay this amount, you know, all the time, and you gonna pay my family when it's time for me to go. So that's a traditional whole life. It's like a lifelong just basically what I said, just a lifelong contract. And it does come with living benefits, as well as death benefits. Next time I come on here next week, we're going to talk about living benefits, because some people, some you know, providers out there talk about they have living benefits and they really don't. And then they tell y'all, oh yeah, you got living benefits. No, you don't got living benefits, okay? You don't, okay? So, but it is building cash value, not aggressively, but it does build cash value, and that cash value is tax-free. That's where you want to put your money is in the insurance company. That way you're building your cash value where Uncle Sam can't touch, and you don't get penalized to go and, you know, borrow from yourself. Anyways, all right, so we went from term insurance and we went to traditional whole life insurance. Now, guess what, y'all? We're gonna get into the universal life, okay? All right, so there's like different elements to the universal life, okay? So you have universal life is basically you're telling the insurance company that, hey, I want to take control over my insurance. I want to take control over my retirement. So this is what I need. I need to have the lowest amount of coverage to stay under the tax codes so I can max out my cash value tax-free, where Uncle Sam can't touch it. So basically, in a universal life, you're taking control versus the insurance company taking control, versus you have a term. But then there's some cool events where you can add in a term and a universal together. Oh my gosh, I ain't gonna confuse you, because y'all are babies right now. So we're just gonna learn about the three different fundamentals to life insurance: term, traditional, universal. So universal got like 4 different factors. I think it might be 5 because there's like a survival universal. But I got 4, okay? All right. So the first one is going to be the traditional universal. I have UL right here, UL. So what that is a traditional universal life is a flexible premium. So it has steady growth, but at a flat rate. So you're not able to go up, you're at that flat rate. So that's what a traditional universal life is. So next one is a index universal life insurance, y'all. I love the index universal. I do a lot of my products in the index universal. So the index universal has its growth that's tied into the market indexes, and it's protected too. It's protected for any kind of downsize that happen in the market. So I don't know if y'all heard that zero's your hero thing, and people being their own banking. Well, that's where the index universal life comes. So yes, zero is your hero. When the market's good, you good. When the market crash, you don't crash. Zero's your hero. So wherever you at is where you at. You don't gain, you don't earn. So that is the index universal life. Then we also, y'all, who likes to be aggressive, there is the variable universal life. So the variable universal life, it lets you invest into sub accounts like mutual funds. So it's more risky, yes. You get more reward, yes. But when the market crash, not if, but when the market crash, you're going to lose everything that's up in there. I'm just saying, y'all. So the ones who got their money in this the variable universal lives, like, all them stocks, 401ks, all them places where it's out in the market, it's probably time for you to move that money, allocate that money into a index universal life, because that index universal life is going to give you the upsides of the market. But when it crashes, zero's your hero. So wherever you are at is where you stay. So you don't worry about losing money when everybody else is crying because they lost their money because they kept it in the market. Well, you had yours in the index universal life, and you ain't got to worry about stressing out and waking up and checking, making sure my money is there. So that's what so that's what I want to say. So that's the variable universal life. So that's the ones who want to be risky and want to take that risk. That's y'all. That's you right there. Okay. And then last one I'm going to talk about is the guaranteed universal life. So the guaranteed universal life, it keeps your premium and your death benefit. It keeps it steady, but it does not make any growth. The cash value is not going to grow. It's more so like a lifelong term coverage. So these are the different universal life insurance. You just got to figure out which one is going to fulfill your need. Now, by me being your agent, I treat your money like it's my money. So if I'm treating your money like it's my money, I'm going to tell you which one I play with. And I ain't even going to play, because I ain't going to play with nobody's money. You can't play with people's money, because people will hurt you over their money. So I don't want to have to stress and worry about waking up, did I lose somebody else's money? Because you're playing with their livelihood. So the one I only mess with is the index universal life. Now we can talk about allocating, which way you want to put some money over here in this one or put some in this one. We can talk about that one. But I prefer all of my people, my members that's with me, is to have an index universal life insurance or index annuity. That way I know your money is protected. And if the market does crash, zero's your hero. So it just all depends. Variable, these are the two that has the higher cash value growth. These are the two, the index universal life and the variable that has the high cash value growth. But like I told you, if you want to be risky, hey, you can be in a variable. But if you're very conservative about your money, how I will be with your money to make sure your money is growing and make sure you have something, okay? I'm going to put you in this index universal life. So these are the difference between, this is the foundation of insurance right here. You have your term insurance, you have your traditional whole life, and you also have your index, well, you'll also have your universal life, and you just have to choose which one makes sense to you. Now, now that we know what a term is, and once again, all of these, it doesn't matter if it's a term, if it's a universal, a traditional whole life, doesn't matter if it's a universal life, all of them comes with living benefits as well as death benefits, okay? So life insurance is supposed to protect your life while you're living. That's why it's called life insurance. So heaven forbid if you were to break down, your life is protected, like that car insurance, the term insurance, if your body breaks down. So let me ask y'all this question before I get off, because I got to watch the time because I got a 2 o'clock appointment. So this is for everybody. Everybody. Now, and people's calling me. So, yeah, DeAndre, I know you calling me. Yeah, but you just wait until I get off this live, because it's me and you, because I got to make sure you're protected. But anyways, let me ask you all this question for real. What time is it? 1:19. I got good enough time. Okay, I ain't gonna stay long on this live, y'all. Nah, I'm not gonna do this. But let me ask all this for real. Let's just say everybody in here that's paying attention to me right now, you have this machine in your house, and it's only one of a kind machine. It's one edition, and you have it, and it's in your house. And let me tell you what this machine is doing. This machine is printing $100 bills on the hour. Every hour on the hour, you're getting a deposit. Choo choo, here you go, it's $100. Hey, this hour, choo choo, $100 here. Yes, so this machine is making you money every hour on the hour. So let me ask you a question. This machine that's making you money every hour on the hour, would you put some insurance on that machine? I mean, would you? Because I ask this all the time. And everybody tells me, yeah, I'm going to put some insurance on that machine. I'm like, oh, would you? Why? Why would you put some insurance on that machine? And they be like, well, Mia, because this machine is printing me $100 on the hour. And yeah, I'll put some machine, because if something happened to that machine and it breaks down, my $100 ain't printing. I said, yeah, that do make sense. I would see why you would put insurance on that machine, because that machine is making you money, and that machine is a machine, and it's working. But sometimes these machines get tired and they do break down. So when they do break down, they either gotta get a new part or rest or whatnot. So I understand why you putting insurance on that machine. Okay. So for them to tell me that, I'd be like, okay, let me ask y'all this question. Did you know that that machine that you put insurance on is you? You're that machine. You are that machine that's working, that's moving, that's pumping that $100 on the hour. You're that machine. So you really truly have to ask yourself, do I have insurance like that machine that was printing that $100 every hour on the hour, and you want to protect that machine because it was printing you money, and if something happened to that machine and your money stopped? Well, do you have insurance? Because you're that machine. And once you break down, what are you going to fall back on? I mean, if you don't have insurance, you can't fall back on the living benefits, whether if it's in a term, a traditional, or universal. Hello? What are we doing out here, y'all? Like, seriously. Life insurance has been a sacred cash cow for centuries. Like, this is how the rich continues to get rich. So, next time I come on here next week, I done educated y'all on the foundation, term insurance, traditional whole life, and universal life. I done educated y'all on that. Okay? Now, we're going to talk about the living benefits and how it's protecting you while you're living. Okay? We know that life insurance given is for death purposes. But y'all, check your policies. And if you got a policy that's just talking about death only purposes, or cancer only, or terminal illness, well, there's more to it. There's more. So y'all got the wrong policy. I know you might love your agent, but your agent might be captive. I used to be captive. I started off with American Income Life, and I just didn't like how they did the people. And then I moved to other IMOs, and I found Experior, which I'm so truly blessed I found them, because you own your book of business. Like, this ain't no game, and it passes down. Whatever I build passes down to my kids. So, y'all, I am going to educate y'all. Y'all might get tired of me. That's fine. Y'all can see my pretty little face, because I'm going to educate y'all on this life insurance, because we all need it. Y'all see what's going on in this world. Okay? And it ain't going to get better. Okay? And there's so many people passing away, and y'all doing this GoFundMe and the fish fries. Handle your business. Get life insurance. Life insurance is also a blessing because you can pull from it cash value, do things with it. Like, y'all, that's all right. I'm going to educate y'all on this. So, we're done talking today. I appreciate y'all coming in, listening to your girl. If you don't know who I am, my name is Mia White with Master Wealth Financial Group. I'm mastering wealth one family at a time. That's what I do, okay? I hope y'all have a beautiful rest of y'all Sunday. Thank you for spending this time with me. I'll see y'all next week. I don't know what time because I'm so busy, so I will be on here next week. And I know my AI has been on here representing me, but this is me live. Hey, do I look better than my AI? I don't know. But anyways, I love y'all for real. And let me ask y'all a question. Do you have life insurance? If not, y'all better call me, DM me, do something. Okay. All right. Talk to y'all soon. Bye.